Hey everyone, where we break down what's really happening in the world of electric vehicles, industry trends, and the companies pushing the boundaries of innovation. Today, I want to dig into an important topic that keeps popping up in conversations, the comparison between Xpeng and NIO, especially when we look at how these two brands are performing beyond their home market in China. If you've ever wondered why Xpeng seems to be making a bigger splash overseas while NIO's presence still feels limited, stick around, this is the video for you. We'll unpack the numbers, the pricing dynamics, the different strategies at play, and what the future might hold as NIO brings its more affordable sub-brands to Europe. So settle in and let's get right to it. This is not financial advice. Please do your own research. To start with, let's acknowledge the reality. If you scan the landscape of young, ambitious EV brands expanding outside China, Xpeng stands out as a clear front-runner. It's not just hype, the sales data backs this up. One of the biggest reasons is that Xpeng has focused on manufacturing affordable, practical electric cars that appeal to the wider middle market. Their strategy is to get more cars on the road quickly by keeping prices accessible for everyday consumers. Take the Xpeng Mona 3 as an example in China. This model sells for around $16,000. That's pretty compelling when you consider that the least expensive model from NIO, like the ET5 sedan, starts at about $42,000. So right off the bat, there's a huge price gap between what Xpeng and NIO offer. If you think about it, one ET5 basically equals the price of almost 3 Xpeng Mona 3S. That's a massive difference for people who want to get into an EV without spending a fortune. This difference in pricing naturally shapes where and how each brand can succeed. In countries like the Netherlands, Norway, Denmark, Belgium, Israel, Singapore, Portugal, Finland, and Ireland, Xpeng has managed to carve out a solid position as a go-to emerging EV option. They're tapping into demand in places where drivers want to make the jump to electric but can't or won't pay luxury-level prices. So you see Xpeng ranking high on emerging EV brand lists across these countries. Meanwhile, if you look at NIO's performance, it's not that they've been completely absent overseas. They have had some traction, particularly in Norway, where they appear in the top 3 emerging EV brands. But in most other markets, they're nowhere near the top, at least not for now. And again, when you put it in context, the price of an ET5 compared to a Mona 3 explains a lot. The affordability factor is hard to beat. This is the same story inside China too. Plenty of buyers who might consider Xpeng simply can't stretch their budget to a NIO vehicle. But here's where things get interesting for NIO's future prospects. NIO has recognized that they can't just rely on premium cars if they want to boost their overseas numbers. So they're working on 2 new sub-brands, Firefly and ONVO, aimed squarely at the more budget-conscious segment. The plan is for these brands to enter Europe and do exactly what Xpeng has done: offer quality, reasonably priced EVs that more people can afford. And they're not just launching these sub-brands with the same old playbook. They're adopting a distributor model similar to Xpeng's, which has already proven to be an effective strategy for reaching new customers abroad. Let's take a closer look at what these sub-brands might bring to the table. The Firefly line is designed for small urban cars, which makes perfect sense for crowded European cities where people want something compact, practical, and efficient. For example, the Firefly models are expected to launch in countries like Norway with starting prices of about $26,000, a sweet spot for families or first-time EV buyers. And while some might say that Xpeng's Mona 3 looks sleeker or more stylish, the Firefly should compete well in terms of cost, making it an attractive alternative. The ONVO brand is just as promising. In China, the ONVO L60 starts around $21,000 with a battery, which is already aggressive pricing. When it makes its way to Europe, we'll probably see that price rise slightly due to import costs and local adjustments, but it will likely still hover around the $30,000 mark, still far more attainable than a $42,000 NIO sedan. So between Firefly and ONVO, NIO is preparing a two-pronged attack that could finally close the affordability gap that has held them back in Europe. Of course, there are challenges. One of the big hurdles for Chinese EV makers selling in Europe right now is the new import tariffs. For example, NIO vehicles face a tariff rate of about 20.8%, which pushes their price up further. It's a significant headwind, and yet we've seen Xpeng weather this and still make impressive sales in Europe. If Xpeng can pull it off under these conditions, there's good reason to believe that NIO's lower-cost sub-brands could find similar success. Another thing worth pointing out is that NIO isn't starting from scratch when it comes to infrastructure in Europe. They already have physical stores and service centers in place in markets like Norway. This means that once Firefly and ONVO are ready, they can leverage these existing locations to distribute the new models without massive new investments in retail. That's a smart way to expand while keeping costs in check. Some might feel disheartened seeing NIO lag behind Xpeng on all those country-specific lists, but the bigger picture is that NIO has always positioned itself as a premium brand. This naturally limits its audience compared to a mass-market brand like Xpeng. The launch of these sub-brands marks a major shift in that strategy, one that could finally help NIO gain real traction among mainstream European buyers. Looking at the broader trends, there's a lot to be optimistic about. In China, NIO continues to hit strong monthly delivery numbers, and the momentum is expected to carry over once Firefly and ONVO models roll out in Europe. We should also remember that NIO's existing network and brand recognition, especially among EV enthusiasts, will help these new cars gain attention right away. They won't be starting from zero. It's going to take some time, though sales won't skyrocket overnight. But if they can execute the plan well, keep the pricing competitive, and continue to build trust with new customers, there's every reason to expect a turnaround in their overseas sales numbers. So to wrap this up, yes, right now, Xpeng clearly holds the edge when it comes to selling EVs beyond China's borders. Their focus on affordability and practical models has been key to that success. Meanwhile, NIO is gearing up for a major strategy shift with its upcoming Firefly and ONVO sub-brands that could help it finally compete on a level playing field in Europe's mass-market segment. It's worth keeping an eye on how these new models perform over the next year. With the right pricing, the right distribution strategy, and the support of existing stores, NIO could surprise us all and carve out a bigger piece of the European market. If you're an investor hanging on during these volatile times, or just an EV fan curious about the next big thing, there's definitely reason to stay tuned. Drop your thoughts below. Do you think Firefly and ONVO will deliver the results NIO needs? Will they finally stand toe-to-toe with Xpeng in Europe? Let's talk about it in the comments. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.